Let's welcome in Andrew Holland, CEO of Avendus Capital Alternate Strategies Private. He's joining us from Mumbai. Andrew, thank you so much for speaking with us at NDTV Profit. What do you make of the earnings that have come in so far? For the third quarter, many of the earnings aren't as disappointing as is expected because of the impact of demonetization. Ex-IT, what do you make of the earnings?
So, I think it's still a little bit early to say that the problems of are not there, because if I just go any kind of results season, the first kind of week of the results are usually pretty okay, and then as we go into further, you do find that there's the results get a lot worse. But if I just kind of read across, say the banking sector. Apart from obviously Induson and Yes Bank, who did very well and were not going to be affected by demonetisation, then I think the Essex Bank's results was a good reading, I think, for the rest of the banking sector, and I think we're seeing that starting to play out as well. Canara Bank was again, pretty disappointing in terms of their numbers. IT as a whole was disappointing. So, it's a bit of a mixed bag. I think maybe expectations, when demonetisation happened, obviously were taken a lot lower. So maybe we're a little bit relieved it's not for some of the, well kind of run companies has not been as bad. But unfortunately, I think as we get through the results season, I think we'll start to see some slippages which we probably won't like.
Right. Andrew, some of the housing finance companies have come out with the third quarter earnings, and they seem to be quite reasonable. They're not really very bad, because we were expecting some crunch because of the demonetization impact. For housing finance companies, it really hasn't been the case.
No, it hasn't, and I think that goes back to the fact that it's a sector which will continue to grow well. There will be little pain points here and there, but if the government and Prime Minister Modi is kind of serious in their kind of move towards more house ownership, then this is a sector which will continue to do well. So even though you might have a few blips here and there, I'm less worried about the housing finance sector as a whole. But that said, I think we just have to wait now a little bit to the budget, which is only six trading sessions away or so, to get a clearer idea of what the government's kind of overall strategy is for the housing sector, and what incentives they're going to give for us, for people buying going forward. So I think good news is, obviously, rates are coming down, people will want to buy housing going forward. So let's just see what those policies are. But I think the housing finance sector remains a good place to be invested.
Andrew, will the budget be a big trigger for the markets? The earnings, some of them will be hits, some of them will be misses. That perhaps is going to get factored in soon enough. What kind of trigger will the budget give to the markets? Where do you think they could head?
So here's where we are. I think it's very simple. We're all saying that demonetisation had the impact of kind of stalling the economy. So, the finance minister, Mr. Jaitley, has to kind of kickstart everything again. And so expectations are very high that he's going to deliver on that. And it's the, simple areas, obviously infrastructure, which is in every budget anyway. Expectations are running high. Obviously, in terms of personal and corporate tax coming down. And then any kind of other incentives to kind of get us to spend. That's really what I think the market's expecting. On the negative side, could he do anything on long-term capital gains tax? The answer is probably yes. I don't think he's going to change the rate, but I think he might extend the years from 1 year to 2 year going forward. So, that might be seen as a more shorter-term negative for markets, but I think the expectations are very clearly around infrastructure and tax, and kickstarting the economy and get us all out spending again, which we haven't done for some time. And I think, unless we feel that the confidence that the economy is going to start picking up, then we're all just going to sit around thinking I can get this product or whatever it is I want to buy a little bit cheaper, whether it's because of interest rates or because of slowing demand or lower demand. So it's an important budget for the finance minister to get right without kind of busting the fiscal deficit, which I don't think he'll do. So that's where we are. It's high expectations, actually, higher than normal.
Normal expectations, but then what about the market reaction? Do you think the market is prepared for that change in long-term capital gains that you're talking about? If the duration is extended from 1 year to 2 years, what could be the near-term risk, and how much could the markets correct?
Yeah, again, it goes back to the whole kind of budget as a budget in terms of the growth factors versus this kind of shorter term negative. I think market participants have been probably expecting something to change. So it's a little bit like if it doesn't, then it's something to cheer and markets will move higher because it hasn't come in. I don't think it'll have a big impact. In the kind of very short term, it just add to the negative. So I think it will play into how the budget is overall seen. If it's seen negatively, then obviously a long-term capital gain tax extension in years will play into that as well, and vice versa. So I think that's the way I would think about it. As an investor, I'm thinking that this, in the longer scheme of things, it doesn't really matter.
Say if there is a knee-jerk reaction, Andrew, to the budget and any sort of changes in the capital gain or maybe fiscal deficit slipping slightly, or some changes which were not expected that come in, do you think it will be a buying opportunity?
I think that I think it probably would be, but then we have to kind of move to the global stage as well in terms of what's happening around us. Which could, not just affect India, but, global factors as well. So we're still awaiting the new president-elect, or president now, Trump, to kind of come out with any kind of economic policies which we can put our minds around. It's all been a lot of talk at the moment. The fear there is obviously, we go to some kind of trade war globally, which would be wouldn't be good for anybody. So hopefully we won't get there. So I think there's a few things that have to play out globally as well. My take is this, and I'm working on the basis that whatever Trump has said, maybe only half of it kind of comes through. But throughout most of last year, one of the things that we were very negative about was monetary policy, playing the part of growth, and we felt that countries around the world had to really start looking at fiscal spending, but also align that with personal and corporate tax rates coming down. And that's exactly what we're hearing now from most countries, that the fiscal side is going to take more of the lead to help growth. And that's a very positive for me. So whether it's a border tax or whether it's a trade war, let's see if that plays out, that negative part plays out. But I think we're going to have to see some action from Trump soon in its first kind of 100 days. Otherwise, a lot of these growth factors which we're kind of getting excited about will start to dissipate. Not dissimilar to when Prime Minister Modi came in. It takes a lot longer to be able to implement some of these measures which are so easy to kind of think about and talk about. Given all the different reforms and measures that you have to put in place to get it even passed. Excuse me.
Right. In terms of sectors, in terms of any stocks that are looking interesting right now, especially after correction, you briefly mentioned about private banks like Yes Bank, which have done very well. Do you think any risk of trade, these banks, these private sector names which have time and again proven them, would continue to do, well?
Yes, the private banks will continue to do well, and that's where our focus will be. That said, I mean, the valuations on these banks are, 2.9, 3 times, price to book are fairly kind of factoring in the kind of, the premium that they should be afforded. So I don't see runaway prices at the moment for these stocks. I mean, they've done it particularly well. I think our overall kind of view is this, is that if we're going to see growth in India, then obviously we'd look at the consumption stocks again, and a lot will depend on what the budget provides there. If housing comes through, then again we'd look at housing finance and obviously all the kind of building materials around that. Metals were kind of a little bit more neutral. If the growth factors we're talking about happen globally in terms of fiscal stimulus, then again I'd be looking at companies with international exposure, whether that's autos, metals, or whatever it might be, because obviously they'll get some huge margin impact from that going forward. And the dark horse, I think, for this year is probably, and it's a second half kind of dark horse rather than the first half, is probably real estate, where I think whilst I'm not saying that prices of land or of housing will escalate very quickly, because I don't think it will, but the steady demand of the base, which is growing, will lead to better prospects for the overall industry. But initially, I'd probably play that through the building materials sector than I would direct real estate companies at the moment.
Right. Real estate would be a sector that you're betting on. Any key reasons?
Which sector, sorry?
Real estate?
No, as I said, I think I'd like to see a little bit more from the budget, but there's limited plays in real estate to play the kind of mid-sized housing market. So it would be an overall trend. So I'd look probably to the larger real estate companies than I would the smaller ones at this stage. But I think this is a second half. I say it's a dark horse sector. I'd just like to see a little bit more. But initially, I'd play the housing sector through building materials.
Right. Just a word on real estate and how to value them. It's been like 8 years since these stocks have rallied. How would you look at them on a NAV basis? How will you look at the volume increase if there is any, if there is a price correction? And is there any point in looking at PE ratios, because some of these companies have high debt and really very low EPS at this point of time?
Yeah, so I think it's more to do with where these companies are positioned, and I think you've hit the the kind of parameters we look at, the kind of debt which they have they been able to shed that, but it's really as the sector starts to kind of improve. When I say improve, I mean sentiment improves rather than prices go up. Then the working capital will start to come through, and that will give them this a little bit more cushion to then start building more. And pushing through, some of the projects which have been stalled for some time, and that again helps the cash flow. So, that's why I'm saying I think you have to wait 6 months just to see how this starts to play through. So in valuations, I don't think there's any parameter you can look at, because if you look at land values, then that's the wrong place to be. If you look at just debt, then it depends on what they can do with the debt. So if you get a nice mix of kind of commercial and residential, and then move towards the kind of mid-sized housing, then that's the kind of companies we want to be buying. Right.
Andrew, thank you so much for taking out time for us. It's been really a long while when we spoke to you, and hope to see you again quite often. That was a view coming in from Andrew Holland.